Good afternoon, everyone. Am I clearly audible to all of you? Okay, let me share my screen. Thank you, Shanti. Thanks for confirming. I hope my screen is clearly visible to all of you. Okay, thank you. How screen is visible? Fine, fine. Thank you for confirmation. Everyone has mentioned. Now, before we begin the new module, that is Introduction to Investment Banking, I would like to take certain questions. Let's say anybody is having doubt or question related to whatever we had discussed in previous session. So you can ask. In the meantime, others will also join. So first, from the previous session, any question, any doubt while solving the questions related to PV and FV? So we'll take that. Some of you have, one of you have raised ticket, were having some doubt. If you are here, then please let me know, raise the virtual hand so that I can explain the doubt over here. Okay, how many of you have done the questions which we were practicing during the session? Yes, Prajwal, we can discuss. Like anybody who is having doubt in question, we can discuss those questions and then we will take the session. Questions done? Just raise the hand. How many of you have done questions which we discussed? I can see so many hands. Okay. Now, any doubt? Is there any doubt related to any question? So now only the doubt one you can type in chat box. The question in which you have doubt, you can type in chat box. We'll do it here only in the set. I'm not receiving any question. Okay, Shanti, no problem. Anybody else who is having doubt? Since, see, if you don't have doubt, then we'll proceed to the session. Test is not there, Prachi. We were just discussing about the practice questions which we were doing in the last session. So in last session, 7 to 8 questions were there. Okay, Kevin, and PVIRR we'll discuss. So let me go back to Excel sheet. I'll share my Excel sheet into, okay, question number 2, 30,000. We'll do. XIRR, CAGR, etc. are covered in the Excel also. But here also I'll discuss something. Wait a minute. Whosoever is asking, let me know if the screen is visible. This one is visible to all of you? Raise the virtual hand only once I'm asking if it is visible. Okay, Krishna, thank you. So fine. Now let me know. First question, anybody is having doubt? First question you all were able to do. And third question. Okay, Suzanne. And third question, this one. First two are clear to everyone. So I'm not going to discuss first two questions. One of you asked about NPER. So I'm going to attempt third question. 1, 2, 3, Prajwal, right? You can match the answers. Whosoever has done the questions, answer are mentioned on the screen. First one is 2839420. Second one, 747258. 7,47,258 is the answer. PV was there. Third one is question number 4, 146. Yes, 146 once it is annual, because the question was given to you as annual. If it is semi-annual, it will become 1,48,024. Right? In the same question, if you change it as semi-annual rather than annual, then it will be 148. First one, okay, Apurva. First one is saying that Nisha invested 10 lakh rupees for 10 years at 11% rate of interest. What is the maturity amount? Let me erase this. So what is given? PV is given, NPER is given, and R is given to us. We need these all only. So this is 10 lakh, 10 years, 11%. First, I'll do slow so that whosoever is having doubt can see it. We need to calculate what? Future value. Rate is there. N per 10. Coming to that also, whosoever is typing in chat box, let me finish with this question and then we'll come to this. Type is 1. Always for the investment, this is your answer. Okay, whosoever is having doubt in the first question can see, you can check from here. These are the cells which I have referred. Okay. Okay, Prajwal, I'll take your questions. Thereafter, we'll do XIRR and IRR as well, right? So first, this question, second is clear to everyone. Now, I'm moving to third one. Third one is what? Time, about N per. It is asking how long will it take? Calculate the tenure of investment. So how we are going to calculate tenure of investment? This one is amount invested, received. This is present value, what he has invested. What he has received is future value, rate of interest 7%. I need to calculate what was the tenure for which he has invested, equal to N per. Within parenthesis, rate is what? 7%. What is the present value? 3,50,000. And future value? Type is 1. Okay, 18.21. This is the number of years required to mature this amount. So 3,50,000 will become 12 lakh after 18 years, 21, 18.21. That will be N per. This is the rate of interest. Then let me check the questions. N per. Suzanne has written about N per. I think it is clear. Another one, whosoever has doubt related to N per. Now coming to IRR and XIRR questions. Rest all is done. Okay. So in IRR, we discussed few questions. I'll take one out of it and we'll do it again. Let's say we need to take internal rate of return. How long will it take? You can calculate for different ways as well. First, where here in IRR, these cash flows are occurring on a frequent interval. No. N per we have to take 0 by 1. No, Prajwal. We won't take 0 divided by 1. Here, you are talking about IRR. We will begin from year 0, where we have invested. After 1 month, we'll receive the cash inflow. So for that, we'll begin with 0. That is the only thing which you need to take care. Rather than writing different, what I have done, you can see I have dragged it. I have selected 1, 2, and then dragged it down. For how long you want to do, you can do it like this. Like if the investment is for longer term. Semi-annual, I'll tell you. Semi-annual, Suzanne, there is not. First, let me finish the IRR. Then I'll come to semi-annual one more time, right? Now, amount in CR will change the amount, or let's first take the same amount. Why I have placed negative sign? Because it's outflow. 10,000 crore is the outflow. Then first year, he receives 2,000 crore. Second year, 3,000 crore. Then 4,000. Let's say he hasn't received any amount in fourth year. Neither invested, not received. Now I need to calculate IRR equal to IRR. Once you type the formula, it will show you values. Guess you need to leave it. No need to write anything. Values, what I'll do, I'll select from this to this. Okay, 11. What I'll do, I'll just do it here, 11.48. So here you can see, you can match your answer from here. Now what? You made certain changes. Let's say fourth year also, that person is receiving something. I have mentioned one, the IRR is going to change, right? So this is about IRR, who was having issues. Now XIRR, what is XIRR? Once this interval is not certain, for example, for after every 1 year, he is receiving this amount, I have kept it like that. if the dates are there, let's say in case of mutual fund, what happens? You are investing certain amount, not on a fixed date. You are receiving dividends also. There are cash inflows and outflows, and dates are not certain. Dates are different. In that case, rather than year, you type dates. I'll take one example. If it is available, I'll copy the question. Else we can make one question. Wait a minute. Let me type it. Anybody can quote any date. Let's say first of, I'm typing random dates, 2022. Let's say 1st of January, someone has invested 1 lakh. Then he has received some dividend amount as well. Pooja will share them some sample Excel also with the LMS. I had already shared with the team. I'll just check if they have uploaded it in the LMS or not, right? Semi-annual also I'm coming. So first question about this IRR someone asked. So I'm explaining to that. Then next was XIRR. This is now taking another date. Let's say 31st of January only. I'm making it more different in terms of dates, taking so many random dates. How you are, he has invested some more amount. Let's say 20,000. Now after 2-3 months, 3rd June, he has taken out, withdrawal some amount. So you can take 5,000. Payment is always outflow, Arjun, right? Inflow, it can be both. That's why I'm taking different options. This person has taken 5,000, whether you can consider redemption or dividend also can be considered. Let's say some mutual fund unit has given dividend amount. So you can put it here, like maybe after 4 July, he has received some dividend, take 4,000 rupees. Then he has, let's say, redeemed this one. He has redeemed this one on 12th of December 22. So 1 lakh, this and 20,000, 120 he has spent. I'm just taking a random number, but it should look reasonable. So that's why I'm counting how much is the investment, and the return should be in that proportion only. 1 lakh 30, or you can take 140. Okay, so here now I need to calculate XIRR for my returns. Here I have in the small sample hypothetical example which we have just created, you can take values. So values from this, comma, these are dates, right? 1 second, there is some 1st of January 22. Is there any decimal point? Anybody can see any difference in terms of date? Can anybody quickly check? I have increased the font size. It is to right. 31st of January, outflow, 3rd, 4th of July 2022, 12th of December 2022. Let me do it once again. There is some mistake. I'm not finding the point where I have placed something wrong. Anybody could check or give me some more example, some other example. Okay. 25 and 4, 1,40,000. I cannot find any error. This is perfect. This is perfect. This is investment now. This redemption, 1,40,000. Yes, format except dots. Okay, no problem. XIRR. These values. Fine, 27% here you can do. Right, whosoever mentioned, thank you for mentioning that point. Who was that? Kevin. Okay, Kevin, this is fine. We have taken a simple example of inflows and outflows as well. You can drag the date. It could be in terms of SIP where you want accurate return. It will always be yearly. Like suppose if you want to calculate within a year, within the same year only it has been calculated. So you'll get for year XIRR. Similarly, you can calculate CAGR also because of the shortage of time, and we can discuss some other points as well in Excel while discussing Excel. But anybody who wants to earn previously, how can you do that? I'll share certain links in your chat box. So by that, going through those links will be helpful for you. There CAGR, XIRR are clearly explained. You can go through those videos and find out. I'll share those videos with all of you. Any other question related to the previous session? Anybody just let me know. Anything we left? Yes, someone is asking about the net present value also. So net present value, we have taken 2-3 example. We'll take the same example. For clarity, this we have taken this as one example, net present value of all future cash flows. So let's say year 0 to 5, we have taken this. First one is the outflow. Second, third, fourth, these are inflows in CR, in crores. So first is 5,000 crore outflow year 1. This is inflows. So sign, you all are aware. Now, how to calculate NPV? Just put the formula NPV. What is the rate? 10% is the discount rate, comma, these are the values. What we are going to take, you can select from initial to end, and then you can, this 7 to end, and thereafter what you get, this 5776 amount, this is investment, you need to subtract from this amount. So that will be less. I'm doing it manually to show you. You can simply select the cell number also, right? Here, two ways. I have done the numeric value, or if you are selecting this cell, please take care of symbol. If you will put plus sign because it is already negative. So while selecting the cell, you will place plus sign over here, else normally it will be negative sign. Okay, NPV is clear. Same we can calculate this through DCF method as well. That is means you are taking each and every cash flows and discounting. We'll do that also. I think we have taken the example, but I'll show you here. So cash flow 1, what is cash flow? Divided by 1 plus this rate of interest to the power 1. Now what I'll do, I'm fixing this so that it should. Okay, once you add these all, sum. Found it? It is same 5776, and you need to deduct this 5,000, it will be 776. What I have done, cash flow 1 divided by 1 plus rate of interest. Rate I have fixed, freeze the rate so that once I'm dragging this, it should not take those cells which are empty, right? If you drag it without fixing it, without freezing it, it will take this and your values will not come. That will be an error. Clear to everyone? Any doubt, any questions related to this part? Who asked? Kevin asked. Who asked about this question? So I hope I have taken all the questions which you were asking. Anybody who is left with any doubt, any question? Can we move forward? Okay. Yes, semi-annual. See, no, Suzanne, sorry, I have not described your question. You asked about the semi-annual payment. In the same question, let's say it is 1 lakh rupees, 8%, 5 years, but here the interest is Semi-annual means me as an investor is receiving semi-annual interest. This is investment in bond rather than receiving at the end of year. I'm receiving after 6 months and after 6 months, next 6 months. Okay, so how I'm going to calculate? One way is, what is PV? I have invested 1 lakh and rate of interest 8%. 5 years. Now, since it is semi-annual, what I'll do, I'll multiply it with 2 because I'm getting how many coupons or how many times I'll be receiving interest? 10 times. Tenure is 5 years and I'm receiving semi-annual. So how many interest amount I'll be receiving? How many times? I'll receive 10 times. So I have simply multiplied it by 2. Now, rate of interest will not be 8% semi-annual. That is 8% per year. Compounding will be there. So what I'm going to do, I'm going to divide it by 2. So interest rate for after 6 months, it will be this continuous come. These values you can take, or in the formula also you can change. For your convenience, I have done it here. Otherwise, in the same formula, we can do it at one go. So what we need to calculate? Future value here. FV, what is rate? Rate, I'll be taking this. N per also, because I'm receiving 10 interest amounts. PV is this, and type is 1. You can see 1,48,000. You can change the amount, try to calculate it. Similarly, you can talk about quarterly also. You have talked about semi-annual. So semi-annual, what we have done, we have multiplied it with 2 divided by 2. Quarterly, what we'll do? Quarterly will, same thing we'll do, but rather than dividing it by 2, we'll divide it by 4 and multiply N per by 4. If it is monthly, so divide by 12 and multiply N per by 12. All of you got this point? This is in case of compounding. If the interest is being compounded, how you are going to calculate the exact amount. And I'll simplify it to understand. For example, let's say someone says you have 2 options. One, you will get semi-annual interest or you will get annual interest. And the semi-annual interest will also be compounded. So definitely your return will be higher. You can understand from this case. This is annual interest. This is semi-annual, means the interest which you have received again has been compounded. So there will be a little difference. So 146 for annual and semi-annual 1,48,000 value. Similarly, you can change. I'll try to make it for quarterly also. What we have done, divided by 2, divided by 4. If you are receiving quarterly amount, and similarly what you will do, multiply by 4. This amount will be, look here, the difference. This is annual. Next one is semi-annual. This one is quarterly. More you will receive the compounding early, more the total amount will be, more the future value will be. So I'll write it here. This is about, in the same question what we have done, annual. This is semi-annual. This is quarterly. Now monthly compounding also we'll see. Monthly. Okay, we'll do it again. Fine. Here only I'll just write down monthly. So rather than this, we'll divide it by 12. And this will be multiplied by 12. This synchronization is important. You can see 148,984. So monthly compounding, that means more future value you receive. I hope this is clear to everyone now. Monisha, we are getting same interest rate, but it is compounded monthly, it is compounded quarterly, it is compounded semi-annually. So once you are receiving your interest early and that is again compounded, definitely you are going to get more amount as a future value. There is a logic behind it. If I say you will be receiving at the end of the year only, you will get less amount. If I say you will receive monthly, in case of bond, semi-annual coupon is there. Again, if it is compounded, you will get more amount. There is a strong logic behind it, right? What I'm saying is not different. It is simply saying rather than getting annual, if anybody says your monthly compounding will be there, I'll definitely going to choose monthly compounding one, which will be receiving higher amount. Okay. Okay, fine. I think the doubts related to this is clear for everyone because I'm not receiving any further questions. Now we'll move to next module, and there only I'll just share few things. Okay, my screen is visible to everyone. So, Gaurav, for first module, maybe next Saturday you'll get the test. All of you will receive the test link by next week, right? Okay, just give me a minute, okay? I wanted to share some XIR and related point also. So I'll just say, wait. I have pasted one link and for all of you where you can check that link, the XIR and CGR explanation, which I have done. Okay, now sharing the screen. Okay, I have seen one question. I think this is the laptop name. You please rename yourself. What I'll do at the end of the session, I'll take your query. You want me to repeat the same and per concept. Once we finish this, we'll take that question, right? In the meantime, you all can receive that which I have shared in the chat box, and you can see later about XIRR and CAGR. Right. Okay, for this, what are the learning objective of today's module? We will discuss these certain agendas or points throughout our session. It will not be completed within one day. We'll take at least 2 to 3 sessions. So what is investment banking? Basic activities involved as an investment banker. Then a brief history about the investment bank, how it began globally, not only about India. We'll talk about where the certain rules and regulation and acts were available in the investment bank, from universal bank, pure investment bank, different categories of the banks available, and what is the basic difference between the investment bank and commercial bank. Further, we'll discuss about investment banking and investment management, how these are different from each other. Then different types of investment bank, bulge bracket, and then regional boutique. These all categories will discuss with certain examples. Different business lines of investment bank, what are the core responsibilities areas where they operate. So let's begin with the discussion. How many of you are aware about what is investment bank? And just explain this in your words only. What do you understand by investment bank? Anybody writing? M&A, okay, Prajwal. Okay. So what you all are writing? This is related to shares, debt, mutual funds, Someone has mentioned about merger and acquisition. So I'm just writing what you all are mentioning here, and we'll discuss further how it is related or not related. Okay, IB assist corporates in managing their funds and investment. Yes. Managing their funds and invest. This is related to different investment option invested through a banking channel. Anshuman, it is more towards the investment management side if you are talking about the retail investment or different categories of the client. Further underwriting, yes, Rona. One of the most important aspect is underwriting. IB is a bridge between buyer and seller. Okay. Bridge between buyer and seller. We'll discuss these points as well. Like what is the gap? What should be the clarity of the words or keywords? Now, rest of the statements which you all have written, I'm not writing it here. I'll just read it for you. So these are the financial institutions which helps raising initial capital for the company, right? This is about underwriting or IPO. Banking operation that helps individual or organization to provide financial consultancy service. Next answer. Third is a bank that provides services to corporations, including fundraising, valuation, M&A, investment, IPO, as well as many other functions. Yes. So Neil has incorporated so many options which are core activities of investment bank. So I'll read it again. It provides the services to corporation, including fundraising, valuation, merger and acquisition, investments, IPO, and other activities as well. IPO, most of you have written and repeated. I'm not going reading again. So assistance in investing and raising capital. Clients assist our clients about investment. Pooja, if you are talking about that is investment management from the banking perspective. That is more towards the portfolio management part. Here it is more towards helping the corporates. It is about talking about the corporate finance, fundraising, helps in listing stock. Yes, Krishna, that comes in underwriting aspect, only one of the aspect of initial public offer. Or the steps. Assistance is investing and raising means raising via equity or debt. Right, Prajwal? Raising money for government and company, yes. So raising for the government also, government are raising money via issuance of the bond. So who is helping them out? Investment bankers. Okay. Banks that companies raise capital through investor. I'm quickly reading this because so many answers. So Rohit, financial service provider outsource services to other banks and multinationals with regards to financial planning, M&A, financial. You have clubbed 2-3 points. The next is bank that helps companies raise capital through investors and merging and acquiring other companies. So far, so good. I have received so many answers. Most of them are directly related to what we want to discuss. So let's take one by one. It is related to shares, debt, mutual fund, M&A. Yes, it is somehow related to these all points also. These are one of the core areas. Some other areas are also there. For example, we are talking about underwriting as a major aspect. So underwriting could be in the form of equity and debt both. If they are issuing money or raising money in form of bonds, that is underwriting debt. Underwriting equity, IPO, like you can easily check what are the previous IPOs, like Crisil, DOMS, and prior to that, Nika, LIC. So many IPOs were there, past IPOs, though those were equity IPOs. Debt IPOs, like raising money via issuance of bond. That also requires underwriting and the role of investment bankers. Yes, it is bridge between buyers and seller. Abhijit, that electoral bonds are different from the topic. So many news is there related to electoral bonds that you can check further, but that is not part of course. For a brief overview, that was like kind of a donation to the different political parties. So that is also under the scrutiny these days. Regulatory bodies are checking like how much is being given and for which party. That is different matter, more towards the political rather than this finance. Okay, but still we can read and discuss about these things in few points later, maybe in other sessions also. Now we are discussing about certain aspect. Key areas which you all mentioned will be covered over here. So investment banking, what it is a specific division of banking, which is basically related to creation of capital for other companies. They are creating capital for other companies. Who are those? Those are the corporates. Why governments? Because governments also need help of investment bankers to raise money once they issue bond. And other entities, these are also corporate entities. What are different activities? You have mentioned underwriting. Underwriting new debt and equity is what I have explained through IPO, equity IPO and debt IPO. So both will be covered under the underwriting services. What is the literal meaning of underwriting? Underwriting means they are taking risk on behalf of client. In case of insurance, you understand about the underwriting. Underwriter is there who checks that much premium is being required by the client, whether he is entitled to receive, whether his human life, based on the human life value, based on the earning capacity. They check all the details, due diligence and KYC aspect, and then only the insurance is given. That is in terms of insurance underwriting. So here also the underwriting is that party is going to take risk. So underwriter is investment bankers. So investment bankers are taking risk of selling the shares on behalf of corporates. These corporates are hiring the investment bankers and providing fees as a commission. That could be percentage of total number of shares underwritten. Let's say they are going to underwrite 100 crore shares. So 2% of that 100 crore, or let's say whatever is being agreed upon, investment banker and issuer will be their fees or commission for helping them out in this initial public offer. Similarly, for the debt securities also, they are helping to raise money via issuance of bond. All type of corporations aiding the sale of securities and helping facilitate M&A activities. Reorganization, broker trades. Broker trades means we are talking about selling the securities. We are here not talking about the individual broker aspect where they are issuing or they are buying and selling on behalf of client. Here it could be a proprietary trading also, because investment bankers are authorized to buy and sell shares in their own account as well. So that is part of proprietary trading. Institutional client, private investor, for them also they are providing trading and broking services. Trading means selling the securities. Okay, so that will be the part of market making activities. And what is their earning? Their earning is the difference between bid and ask, which we'll discuss further as well. Yes, Prajwal, your point is like that is underwriting is different, which we have discussed in terms of banking and the insurance part. Here, the underwriting will be these investment bankers. For example, any corporate wants to raise money and they want to sell their equities. That means they are coming up with IPO. They want their share to get listed on the stock exchange. There is a complete step of process, and what they are going to do, they are going to do this kind of activities where they know how many shares they can sell. If it is 1000 crore, will they be able to sell 1000 crore? So there are different options or types available, all or none. Like they will take the responsibility of selling entire issue, or best commitment, whatever. If the entire issue is not sold out, they will return the rest of the shares to the corporates only, or to the promoters of the company. So these all are the different types by which the agreements which are being done between the investment banker and issuer, right? Definitely, they help in merger and acquisition, take over these all activity. We'll discuss Harsh in this business line, different business lines of it. Investment banking. Aditya, we have started. I think I'll just give you a brief. You can go through the recording as well. But so far, what we have covered, we have just begun with the topic of investment banking, a new module. Prior to that, we were discussing about the questions related to the previous session. Anybody who has doubt related to questions, they have discussed their question. That's all we have done till now. Okay. Okay, they help corporates, governments, and other groups to plan and manage the financial aspects. This we have just discussed. Now, okay, talking about the brief history of investment bank, where it was started. You can see this mind map over here. This is just a brief idea about how it started. 1472, there was a bank that this bank belongs to Italy, Banca Monte. Still, you will find this bank because since 1472, it is involved in banking activities and it is existing. Barclays 1690, these are the year mentioned once they came into existence. Credit Suisse, Goldman Sachs, Deutsche Bank, Merrill Lynch, BOA. Merrill Lynch and BOA, this is a merger like during the time of 2008 financial crisis. Merrill Lynch and Bank of America were merged together. Morgan Stanley, 1935. So this is a brief idea about the investment bank's history from where it started. And this is the oldest existing bank. Now, how it started. For example, if we talk about the global perspective or taking an example of US, there were different corporates. They were into heavy machinery or the mechanical part. They were producing for example, manufacturing products. They were into mining. They were into rail projects. They wanted to raise money. These corporates want to raise money. Then, or the government also, but government was not aware about the financial aspect, about how to sell bonds, how to raise money via bond. So pricing related problem were their marketing. These all expertise were not with them. They took help of investment bankers to assist them in raising money. So that was how it began. These government took the help of investment bankers. Through the various investors, they have raised money. And what the government has done, they have provided the bonds against the money which they have raised. If these bonds had certain tenure, for example, 5 years, 10 years, and thereafter they have returned the money. So basically it was what you call in terms of bond, what we call as the PV, like par value, which is also called the face value, PV or FV, if it is issued at the same point. And then they promise to pay certain interest amount on annual basis. That is termed as coupon. Like, so let's say 10% is there. So 10% per annum on the amount which they have invested. They will receive the coupon. It could be semi-annual also. And then they will return the money after the tenure. So investment banker were the mediator or the bridge between this government and investors. So you can understand it in terms of these two parties who are borrower. These are borrower. And these are lenders. And this is bridge between them. They are having surplus amount, they are scarcity, they want to utilize this amount for further project, further activities, maybe the growth, expansion. Ravi, I have just checked your question in the chat box. Previous sessions recordings are available in LMS. You can anytime go through it. Whosoever has missed the previous session, just go to LMS, check the previous classes. 4 classes has happened. We have covered 1 module. You can go through that completely. If any issue, any doubt is there, you can either raise a ticket or you can discuss it with me through the next session as well. Both options are available with you. But first, go through the recording of all the session. Take it as your first class and go through this module. Okay, then second, you can go through this module which we have discussed, basics of finance, in the previous session. This is entirely new module, so you can just pay attention to this. Okay. So how it was started? 2 major issues while purchasing bond from government. In case government defaults and they don't pay the coupon amount or they don't pay the initial money which the investor has given, what is going to happen? If government wants to reduce the interest which they are paying, so that means who is responsible for all these renegotiation, other thing? Investment bankers, who are mediator, who are bridge between the investors and government. So there is a small case, I'll just share very brief about it. 1842. 18 American states defaulted. They refused to pay debt. Means the government also default. So in that time, who were the middleman? The investment bankers. They have arranged the deal. This investment bank has arranged the deal between these investors and the government, and they responded in a decisive manner in the favor of investors, and they negotiated with the government and persuaded them to pay the money to investors. So this is the one case where the trust of the investment banker is there with the investors, because they have seen that middleman is taking the charge to receive their money, to get the money recovered by the government as well. So their reputation, their quality, their security, this has been developed. Okay. So in that case, what happened? So state government agreed to pay the part of the debt which they started to defaulting. This is because of the involvement of investment bank. Okay, there were certain government regulations which were imposed or which were acted, which were enacted in 1933. Glass-Steagall Act was there. How many of you are aware about that Glass-Steagall Act? Initially, what happened? Initially, commercial banks were also involved in providing the services. So commercial bank, if the commercial banks are providing the investment banking services, how it is going to impact? There is an integrity issue. How the integrity issue? Because you all are, you can take this situation as any of the retail bank or any of the wealth management branch of the Indian bank provides the investment banking services as well. So what is with them? They have all the data of investors. That means how much amount is there available, how they can easily persuade the client to invest in certain activities, certain funds, certain activities. And whereas they can help the corporate also, they know whom to target, the client with the existing account amount in the back. Another side, there are corporates who wants money, who wants to raise money. There, if they raise money via these investors with a huge amount of data available within them, and then they are indulging in providing the services to commercial bank, to corporates, and taking the commission as well. So from an issuer or the corporates, they are receiving the commission because they are helping them out to raise money. Here, for investors, they are utilizing their money. They are helping to utilize that. They are suggesting them to invest in, let's say, bond or some other instruments available. So from investor, they are earning, from corporates, they are earning, double earning. But what is going to happen in case those corporate defaults? So in that case, there is some integrity issue. Thereby, the act says the commercial bank will not allow, are not allowed to provide investment banking services. This was the act, and that was through regulatory mechanism. Means no commercial bank will be providing the investment banking services in Bangladesh. Thereafter, one more act came, which repealed the services. Right, that was Gram-Leach-Billay Act. So why, once the act came, which was in favor of investors, then again why they have started selling both the activities together, or under one roof they are providing the investment banking services as well as commercial banking services. So there the concept of Chinese wall was introduced. That simply means the activities which are being done in the commercial bank, they are not going to share the data of client and any of the information of their client with the investment banking division. So they can be, ABC Limited can be into investment banking and the commercial banking, but what they are supposed to do, they are not supposed to share the client information. One division is not supposed to share to different division. So means protection of the interest of client, right? So this way, the banks were allowed to perform both the services. In that situation, some banks chose to be only pure investment bank. They were not indulged in the commercial banking activity, whereas certain banks were there which have selected to be in both the divisions, right? So they were termed as full service bank. This was about brief history which I have just shared. Anybody, any question or doubt related to what I have shared? Okay, so this is mentioned over here. What I have just started discussing, this was Glass-Steagall Act, which was introduced in 1933. What I have told you about, it prohibited the commercial bank engagement in investment banking activities. Why? Because of because to protect the interest of investors, they cannot use the client's account or the information to sell risky securities or risky investment to them. Okay, so they cannot trade and distribute securities. Here, I just discussed about this part that banks hold all the information of the borrower and they could offer risky instrument to investors, right? So these are investor like you and I, and borrower like corporates who wants to raise money. Let's say they have raised money, but anyhow they defaulted. So who is going to bear the loss? The investors only, because they have paid huge amount of money and the borrower is not able to repay it. So here the universal bank's role is also very important because they persuaded the client to invest in these security because they had the entire data available with them as a commercial banking services. So why this rule was made? This was to protect the interest of investors, right? Prachi will discuss that concept also. Just a second. We'll discuss universal bank as well. Right? First, just understand these two regulations or the important acts. Next is, okay, this was the second part. Second part of the government regulation. We are talking about the US. In 1999, in US, Gramm-Leach-Billay Act was introduced. So it allowed the commercial bank to sell securities. In the previous act, what happened? The Glass-Steagall Act, they were not allowed to sell there. It was prohibited to sell the securities. So after regulation, these were the bank like HSBC, Bank of America, Deutsche, JP Morgan. They emerged as global financial conglomerate. And there were certain banks who remained pure investment bank. Pure investment bank means they were not involved in providing the commercial banking services. Why they have operated, they have preferred to be pure investment bank because they wanted to be specialized in one particular activity or one particular domain, and they need to capture the niche area, not the entire. You might be aware about just an example, I can quote it here. You know about the wealth management division and the retail management, retail banking. So in retail banking, what happens? All the clients are welcome. Any client who wants to open the account with the 10,000 rupees or 5,000 rupees, they can open the account. But what happens in wealth management? There is a threshold limit. Limit is what? 30 lakh, 40 lakh. So 30 lakh only, the beginning, they will open the account in wealth management division. Thereafter, the niche area or category is what? Elite client. They need not serve it on the just like a retail client to prepare the DD and long lane and queue. No, they prefer a certain limited number of clientele to whom they can provide a lead services. So this way there is a demarcation. Pure investment banks wanted to remain focused on certain specialized activities which are towards the merger and acquisition, asset management of the corporate, and so on. Okay. Banks were involved in proprietary trading and brokerage. What is proprietary trading? I have just given one example. Rather than on behalf of client they are investing, they can buy and sell in their own account also. That is called proprietary trading. So what they get brokerage also. And another thing is how they are earning in proprietary trading. They are not going to buy one or two shares. Since they are corporates, they are going to trade in huge amount of security. You might have seen about bid and ask in a terminal, in a trading terminal. What is that bid and ask? Those are the market making activities. Bid means buy price and ask means sell price in very simple word. Bid is the price they are quoting to buy any security, and ask is price they are quoting to sell securities. So the difference between these two is a spread, which is the earning of these market makers. What they are providing, what are the other services? Research recommendation. Recommendations means equity research recommendations here we are talking about. buy, sell, or hold the particular security. Underwriting services, underwriting means assisting them in IPO, which is another term. Another term which is used for underwriting is what? Lead managers. You might have heard about lead managers which with so and so initial public offer. Once you go and check one pager or draft red herring prospect, you will see how many lead managers are appointed for that particular IPO or the underwriters. Okay. So by these two, we have discussed in brief, we have discussed about these two acts and why it has been allowed, because there was a concept of Chinese wall, which was a barrier between two different divisions. So one division or department is not authorized or allowed to share the information of client to other department. Within the same umbrella also they can work, but they are not allowed to share the information of client. Okay. So confidentiality of information will be kept. Let me just read the question which is there in the chat box. One second, Ronak, two questions are there. Once we finish this, I'll take your question. Universal Bank, we have just discussed about the Universal Bank. These are the example who remained Universal Bank. We were providing the services like these. These are the pure investment bank. Universal Bank provide both the services. They global financial conglomerate, you can say. Okay, they are providing the investment banking services as well. They were involved in the commercial banking services as well. So all services in one roof is the universal bank, and pure investment banks were not providing the services of commercial banking. Okay. Underwriter concept, Girish, underwriter concept, we are talking about any investment banks which are hired by corporates. Let's say company. ABC company wants to go public. They want to float their share in the market. They want to get their share listed on the stock exchange. What they do, the primary, they have two options. This is only financing, mode of financing, whether equity or debt financing. So IPO through equity, by issuance of equity is what they are doing. They are exits. They are selling certain number of shares. Okay, now the investors will become owner of that much part which they are selling. How the process involves? Process is, first they need to hire the investment bankers. Investment bankers analyze the complete detail, prepare the draft red herring prospect. Then what they do, they check what could be the rate available by analyzing the price mechanism. It could be the relative valuation. By relative valuation, they'll check what is the price, peer group price. Then based on that, they will select the criteria. What could be the price? Book building or fixed price issues are there, where the price are set in advance, and in case of book building, a range is given. Then you can talk about the approval. Once the SEBI approval is given, stock exchanges approval. So this all comes under the underwriting part, which the investment banks are doing. They also termed as lead manager. And it is not necessary that once any company is going public, they appoint only one or two investment bankers or the underwriters. They can appoint a number of underwriters based on their requirement. Long back, once the Reliance Petroleum IPO came, it has appointed the highest number of underwriters at that point of time. They appointed 10 investment bankers, 10 or more than 10 lead managers. So this was because of the size of the issue was so large. That is another thing that is not very popular, that has not done well. Okay, Girish, understood about the underwriting part. So that is the lead manager who are helping the corporates to during the process of initial public offer. Next is about the proprietary. Proprietary trading is nothing, means that an investment banker is allowed to buy and sell the shares in their own account as the proprietary trading. For example, investment bankers. This is legal, means through SEBI, within the SEBI regulations, rules and norms, they are allowed to buy and sell in their accounts. For that, they need to report the proper detail about the transaction which they have done. It should be in a permissible limit. What Manish exactly you want to ask? If requirement is not there, then they will remove. I could get your statement. Okay, please rewrite or just clear what exactly you want to express. Fine. Now, talking about one more, since we have discussed a lot about the investment bank, commercial bank, what is the difference? So this table will give you a clear picture in very simple terms of what exactly activities. In commercial bank, what we say in commercial bank is in very simple word into deposit taking and money lending. That is what we understand in the commercial bank. You need loan, you go to the commercial bank. You want to deposit money like FD, RD, saving bank account. These all are the basic tasks, roles, and responsibilities which are done in commercial banks. Treasury management, this is for retail as well as HNI client as well. Corporate clients are also there. It's not like corporate clients are not in taking the services of commercial bank. They are, but more towards the retail. Now, talking about the investment bank here, it is not into deposit taking and money lending. Number one, the basic difference. Investment banks are not into money, like they are not into the transactions related to deposit and money lending. Second, it is not taking care of the retail client. Retail services are not provided by them. Then what are the main services? Merger and acquisition, market making, asset management, underwriting services, trading and brokerage. These all the basic activities. Custodian services. Fine. I'm using certain term custodian services and all this. I'll keep on explaining further. The moment the terms comes, I'll keep on explaining and writing it here. Right. So don't get confused with these words. Once it comes, I'll explain. Deposit taking is the activity which is performed under the commercial bank activities. Here deals with more complex set of transactions. What are those complex set of transactions? Merger and acquisition, asset management, capital market, trading and brokerage, asset management, restructuring. So this is, you can term it as a different business lines of investment banks, or what we call as activities and what the commercial banks do, as I have just discussed about the deposit taking, lending money, cash management, treasury management. Who are the client segment involved in corporate bank, or the parties involved? Retail, small, medium, and large corporates. All are the clients of commercial bank. Here, institutional investor, private equity firms, hedge funds, large corporate, ultra HNI. These are the clientele of investment banker. Three basic and the core area by which you can differentiate between investment bank and commercial bank. One second, I'll just read one question which Manish has mentioned. If they hire investment banker for underwriter after issuing IPO, it is any chance company will remove the investment banker? There is no rule, Manish. Once the share is listed, the services are for hired. They are hired for the services till the IPO only. Thereafter, why will investment banker help them out? Until unless they hire them for any other services, they will help. But the commission or the fees is still that activities only. They will help them to issue the initial public offer. After issuance, the price stabilization mechanism is there. Once the task is over, they are paid. That's it. Okay, this is the mediation. You can understand in a simple way. They hire an investment banker for only this purpose, IPO. Once the initial public offer comes, shares are issued to public, it is allotted, listed in the market, price stabilization is done. Okay, thereafter, they are paid, and relationship between investment banker and the corporate is over for this purpose. If they need any other assistance, they will again sign any document and they will again sign any deal. That is what exactly you wanted to ask. Did you get your answer? Gaurav, they are authorized to do so within the permissible limit by SEBI. You can see there are certain rules and regulations which are made by SEBI which are very strict, and they need to follow. They should be in a within the permissible limit which is being done. There should not be overdue. I'll just mention few examples for that. In typical broking houses where the offline trading is being done, there is a trading terminal. There are different dealers who are executing the trade, who are buying and selling on behalf of client. So for each and every terminal, there is a limit set. They cannot buy more than that. Like within the day limit for particular share, day limit for lot, everything is restricted, so that there should not be any manipulation that within the same brokering house, one is buying, another is selling. So price rigging, manipulation, to avoid these activities, they have made very complex and very high scrutiny, and the different level of checks are involved by SEBI. Regulatory options, regulatory mechanism is very strict, and the core purpose is to protect the interest of investors, right? They can do so. Investment bankers can do trading in security before advising, but everything should be in the permissible limit of regulatory mechanism, regulatory norms. Okay. So someone has asked about the universal bank and pure investment, although I have explained, but here also you can see with this simple table, what is the description? Universal, as I said, that one stop, all services under one roof. That is what I said. This is one stop solution for all banking activities, means they were authorized to do commercial banking services as well as IB operations. And these are the banks which were termed as universal bank versus Goldman Sachs and Morgan Stanley, who selected to be specialized, and they were providing only IB services. They were not taking any deposit. They were not into credit giving. This is the basic difference between the universal bank and pure investment bank. Right? Clear till now, whatever we have discussed? Any doubt, any questions? If you have any question, you can just write in chat box. Okay, fine. We'll take 5 minutes break, and then we will discuss the rest of things. Okay, 5 minutes break for everyone. We'll come back after 5 minutes. Okay, all are there. Okay, fine. 1 second. I'll just read one question which was there in Q&A session. I'll just answer that. Raising money. Rahul asked raising money for government and company. Raising money for government and company simply means that, let's say there are government entities, and government entities, what I talk about is that simply means central bank and the state bank. They also need money. For what they need money? They need for their planned and unplanned expenditure. If we talk about the planned expenditure, like these, you can club them together, like the projects, national highway, then roads, and other infrastructure activities. For that, they want to raise money and they issue certain bonds. So for central bond, the government, what are the money which is raised? This is little different, or the question which was available in the raising money. I'm describing that in simple way and concise way. So raising money, I'll write here only. This is about government, we are talking about. This is central government and another one is the state government. So in terms of bond, once they raise money via issuance of the bonds which central government issues is termed as GSEC, government securities. State government, SDL, state development loan. So this is what the government is also raising money via issuance of bond. There is a tenure of the bond. It could be 10 years, 15 years, 9 years, 8 years, based on the nature of the bond. So now they, after 10 years, what they do, they repay the money which they have raised, and then during this tenure, it is 10 year, and they promise to pay certain fixed interest amount to the investors. So every year they pay that amount as a coupon on the interest. SDL, state development loan, there the coupon amount is semi-annual. That means the interest which is promised to pay, that is paid and semi-annually, twice a year. Okay, this is SDL. Once we discuss about the fixed income security, I'll elaborate this concept and you will understand about the yield and everything here. But here, just understand raising money. If government wants to raise money, so central government, they raise money via bond. For that also, the investment bankers help them out. They are as a mediator, bridge between these investors and the government. Again, another aspect is equities. The corporate also wants to raise money, then they can also issue the bond. Similar way by which the government is raising. Corporate also raise money via issuance of bond. And the third part is equity. Equity means they have existing company, they sell certain portion of their equity, they want to go public, the share is being traded in the stock exchange. By this way, they are doing this IPO, equity IPO, right? And this through the issuance of the bond, there are also the same mechanism, a little bit differences there that we'll discuss in detail in fixed income securities module, right? Now just taking, I hope the question is answer is clear to you. Who asked? Rahul. Okay. Now, another aspect, why these all terms I'm going to discuss it, these are the general aspect where most of you get confused about these terms. Sometimes you feel that these terms are synonymous, these can be used interchangeably, but no, not always. There is certain difference. I'll take one by one what exactly is being done in this activity and that. Fine. So talking about this part first, raising money via equity and bond. Just now I have explained because someone asked this question, but let me know if there is any doubt related to raising money. Why they want to raise money? Because they want for different purposes. They want to, let's say, open their office in new territory, new region, explore new region, new areas, new plant and machinery, expansion of the business, growth of the business, a new product. They want to expand their businesses to different locations, right? Okay. This first is clear. IPO is clear to everyone. Now coming to this, assisting and negotiating M&A deal. M&A is nothing, merger and acquisition deal. So investment banker assists the corporate throughout the M&A deal. How, let's say, a company A wants to acquire B, so they are not going to acquire immediately. It is, as IPO involves certain process, M&A activities are also involving certain steps and process. So first, there are certain legal aspects also which are included to check the detail, how the company deal will be done, is the size of the company, then is there any name change, who are the directors. So, or as we do in the drafted hearing prospect here, there is NCLT, National Company of Law Tribunal, that is also involved in this kind of operation M&A deal. Then the stock exchanges, everything is being scrutinized and checked. If the shares are listed, then the SEBI approval is involved, stock exchanges approval, because in case of merger, what is going to, all the parameters is going to change. Now the company which is in someone's name, which is already listed, how the proportion of the share will be changed, right? So these all things, assisting and negotiation in M&A deal, every aspects, step-by-step procedure, then the checking about the company which wants to be acquired by someone else. Then the pricing also, how to evaluate the what is the current worth of the company, equity and debt, then how the deal is being going to be closed, what is the consideration amount. So consideration amount means it is only shares, it is, or it is only cash, or it is mix of some shares or cash, how the deal will be closed. So these all aspects are involved while negotiation and assistance M&A deal. And this is done through investment bankers. Here also, they get a good, huge amount of the percentage based on the deal. So as an investment banker, what they do, they try to sell the company, or they want the deal size to be as much as possible, because based on the deal size only the commission will be higher. So they want to maximize the deal size so as to earn more fee as a commission. Okay, so best effort they do to maximize the deal. What are the other activities? Equity research, sales and trading, which is the part of the trading activities or the capital market activities as a part of investment banking. Now, taking the different aspect or different side of investment management, sorry. Anybody who is having any doubt, or you want to add any point, please write in chat box. Okay, fine. So let's move to the different sphere, different aspect. What is covered in investment management? Here, you can talk about the personal financial planning aspect or the portfolio management aspect in the investment management. It could be for different categories of client. It could be for retail client. It could be for high net worth, for ultra high net worth. So assessing the financial role and risk appetite of the client is the first step, you all know, by checking the recommendations or the suggestion related to different financial instruments is given to client. Then they create tailor-made, what I just mentioned, that they create a tailor-made portfolio based on the different needs of client and goals and needs of client, and different strategies are suggested. Based on that, investment is being done. Once the investment is being done, the role and responsibility of the financial planner includes the scrutiny or the checking, reviewing the portfolio on a regular basis to assess, is there something which needs to be changed, which need to be corrected, reallocation should be done or not. So these all are done under a review section. This is the basic difference between the investment banking and investment management activity. Anybody who is having any doubt? Credit rating, Harsh, is the part of the debt part, which we can discuss. Like in mutual fund also, you have seen the star rating. But credit rating here, I'll just explain your question with one example. Okay, fine. Sell side will be discussed later. So what I'm explaining is, this is done in case of, like, I'll take the example of bond to explain this. If you check the government bonds or the corporate, you will check the corporate bonds. It includes certain rating. Rating is just an indicator to investor. What is the risk associated with that bond? If I talk about the rating agencies, CRISIL, ICRA, CARE, Moody, S&P 500, like if I talk about the global Moody, S&P 500, and so many, Brickwork, India Limited, and other agencies also. These are few examples. So how they rate, let's say AAA or AAA plus, BB plus, C, D. So D is the rating which is the area of concern because it includes the high risk. If the D rating is mentioned by the credit rating agency, that simply means the company is struggling and the company which has issued bond is financially struggling and they might default. So D is indicator of default category, and it is also termed as high yield bond. These are considered as junk bonds. The bond which has rating D considered as junk bonds, high yield bonds. And these are investment grades. Risk appetite is also calculated in our online banking services. Yes, Prachi, this is the part of investment management approach. So in case of investment management, the first step is to check the risk appetite, and then different activities are involved before suggestion of the portfolios. Right there, he asked about the credit rating. So I was explaining about these categories, one example. No, Harsh. These are the companies, these are the credit rating agencies which comes under the purview of regulatory authority. So these are also, you might have checked, there are certain issues or the cases which you have checked in certain companies. I am just checking the name, recollecting the name of that company. ILFS default. There was a company called ILFS. ILFS has defaulted on the debt obligations. So there was a scrutiny has been done through the regulatory authorities. Now the rating agencies which were given rating to this ILFS were also under the mark of as SEBI scrutiny, and they were imposed certain fine on those credit rating agency who has given a wrong rating to these companies which defaulted. Right. So you can go through the case of ILFS, DLF, like DLF and all, which defaulted during that point of time. Investment management, also trading of securities of. So investment management includes, Gaurav, investment management includes, investment banking does not. Investment management includes, here you can take example of any of the broking company. For example, ICICI Securities or SDFC Securities. They are managing the portfolios also, like PMS. So what PMS is, that is they are trading on behalf of client with the due permission of client. Client signs an agreement with the investment management firm, and he gives the authority to the broker that he can buy and sell on behalf of client. So a fund manager is there who is managing that PMS. They buy and sell based on the client risk appetite and the plan which they have just created for that. So different PMS category are done. That is part of investment management only. Okay. Fine. I think I addressed all the queries which were available in this chat box. Now we'll come to buy side and sell side, which is the most colloquial term once we are describing about the investment banking activity. Okay, so anybody who can guess what will be covered in buy side and what will be covered in sell side? Any idea? Anybody would like to answer this question? Market making, providing liquidity, nil, okay. Buy side equity. Let me read. Buy side means looking for investment opportunity. Okay. Buy side is equity, market making, providing liquidity. What about sell side? Yes, Kartikeya, you raised hand. Selling a stake from company. Okay, I'll keep on writing what you all are writing over there. Or giving investment tips regarding buy, sell, and hold different securities, Krishna. That is that can be, we can count it as research recommendation. When a company needs funds and it merges with other company, okay. What I'm reading is the points which you all are writing. Sell side, one who sells the security on behalf of issuer. Okay, right, Aryan. Buy side, high net worth individual, FIIs, sell side, IPO. Right, all well, all well. Just let me write down. So sell side, if I want to write, fundraising, that IPO part, etc. can come. Selling securities. Assisting or helping in M&A. Merger and acquisition. So what sell side IB does, they help the companies and institutions in M&A activities. They sell securities and fundraising through initial public offer, right? So there are different options like origination team or the trading in securities. Origination is the first part, then trading of the securities comes. Now, talking about the buy side, I will just write down few activities. Asset management. And then here also equity research. Investment decision. Okay. So equity research, asset management, we are talking about buy side. These entities are these buy side investment bankers are involved in the operations related to equity research. They do pricing or financial modeling. These all activities are involved in the buy side activities. For sell side, they are involved in IPO, fundraising. They sell the securities. They assist in M&A deal. Okay. And okay, two more. Government bonds, sell side. Okay. Advertising companies to buy or sell another ventures based by dividend amount. Let me erase this point and then we will discuss this point also. So whatever I have mentioned, we have already discussed it. Now go through slide. Sell side involves trading securities for cash or for other securities. They are facilitating the transactions related to market making. Market making is like once any of the broker, dealer, or investment bankers, they involved in providing bid and ask. What is bid and ask? Let's say you have anytime you get an opportunity to check the trading terminal, any of the security like ABC Limited is there, you will find a certain tabular form, the quantity. This will be here. I'm just telling you what quantity. So bid means buy price. Let's say as share is having 100 rupees. Somebody has quoted buy at 100 rupees, ABC Limited. What is the quantity? 1000. Similarly, someone wants to sell at what? 100.40 means bid is lower, means I want to buy something, what I'll quote the less price. Someone who wants to sell, they will quote higher price. So ask us what seller's price. Seller has quoted 100 rupees 40 paisa. So this is the quantity. Let's say they want to quote 1100 or any number of shares. Now what? You can see the difference. 100 and 100.4. There is a less different 0.40. That shows high liquidity in the market. If this gap is higher, that means liquidity is less in the market. Had it be 101, 102, that means there is a liquidity is less. because this gap can be easily filled out. It can be modified. Buyer will be able to quote a little higher, or seller can go a little down. So the less spread means the larger equity, the liquidity in the market. If the gap is wider, the spread, the difference between bid and ask is called. It's not bid minus ask. It is. I just wanted to quote the difference between bid and ask. Ask price will be great. So this is the spread. What they earn through the spread amount. You can see this 40 paisa is very small amount, very less amount. What will be the earning? But here the quantity matters. They are going to buy huge amount of quantity. And that is why the liquidity is created in the market. Once you see the demand for any of the share is more, that simply means the investor sentiment says buy. If there is outflow or panic selling is very much, that means that is going to create a panic. More and more number of investors will be willing to sell that. So this is about the demand and supply. And investment bankers, market makers, like brokers, dealers, they are responsible as a market maker. So they create a liquidity. Moreover, they earn also from the difference between bid and ask. Okay, so underwriting like means IPO, equity research, trading, these all security will come in sell side activities. Means they are selling. Buy side means there are certain entities who wants to buy. For example, mutual fund, pension funds, hedge funds. These are buy side entities. They are insurance companies. You know, these companies has huge amount of corpus available with them. So they take the help of investment banker to invest in investable securities. Okay. Yes, a sell side will be involving in this underwriting, equity research, mainly the institutional investors, right, Neil? And the activities which I have mentioned are involved in the sell side part, like underwriting, research, trading. You can go through these points 1 second and just stay here for 1 minute. Just go through the slide. If you find anything which is not clear, do let me. I'll once read for you. So it says that sell side consists of investment bank, commercial bank, brokerage firm, research firm. They are selling investment. What are the selling investments? Instrument like financial instrument and services to their client. And investment bankers are appointed to sell initial public offer as an underwriter or the lead manager or the merchant bankers. Now, buy side refers to companies like mutual fund, hedge funds, pension funds, private equity funds, insurance companies that buy for themselves or they buy on behalf of clients. Okay. Any doubt, any point anybody would like to add? Oh, now, what is capital market? Anybody can define what is capital market? What you understand by capital market? It will be, I'll appreciate if answers will be yours. It should not be bookish. Anyone is typing? Okay, no one? 6 answers. Okay, fine. So I'll just quickly read what you all have written. Let's see. On there. Equity market. Okay, Prachi. Then interest rate trading, Neil. Then where money can be borrowed. No, capital market. Yes, if we talk about the debt market segment, or you are talking about the perspective of issuer, I can take that. Like borrowing from the perspective of issuer, bond trading is debt market portion. Market for long-term securities, money market. Market to raise funds, bring buyer and seller together. Market that bring buyers and sellers together. So most of the answers are market or the platform which brings buyers and sellers together, right? Financial market. Next answer is where bonds and securities are traded. Debt and equity instrument. Perfect. That. Okay. Anything that includes buy and selling of stocks, bond, debentures, preference shares. Fine. And we will just bifurcate it into two broad categories. Rest all you have mentioned, buying and selling of the different instrument. All right, all right. I really appreciate all of you who are quickly writing in this. That simply gives an indication that you are still there throughout the session. Nobody is moving ahead, moving here and there. You are involved. That gives me a positive spirit. Thank you, everyone. Thank you for that. Okay, now coming back to the point which I was discussing, since you all have written all the relevant points which I wanted to listen from you. Next is, I'll give one more perspective is that will the primary and secondary market perspective. You all are aware about that. But still, how many of you are clearly aware? What is the primary market? What is the secondary? All. Just raise the virtual hand. Most of you are aware. Okay, fine. Whosoever is not, I'll just explain in very brief and quick. So primary is what? We are talking about initial public offer. That simply means shares are issued for the first time. So primary market is also called NIM sometimes, new issue market. The share are not traded in the market right now. It is first time it will be introduced. So we'll take one example. Previous IPO was CRISIL, then DOMS. So CRISIL was not traded in 2021, 2020. What they have done, they have launched their initial public offer. They appointed lead managers and they approached through lead managers. They wanted to sell their shares. It came to public. It came to public through this initial public offer, IPO, and then investors who are willing to invest in that share, they have sent their application to online or offline. And once they have got the shares have been allotted to them. It is free for, they are free to sell via NSE, BSE platform, that is National Stock Exchange and Bombay Stock Exchange. This is secondary market platform. This is new issue market. Any company which wants to go public, they go via primary market. And here the role of issuer is there. Issuer is involved. Issuer and investor. So if I talk about the parties involved in the primary market, issuer and investor, definitely investment bankers are mediator. They help the issuer to issue the share, but main two parties are issuer and investor. Issuer wants to sell their equity through IPO platform, and the investors are allocated once they applied. Now, once the shares are allocated, the issuer's role is over. In secondary market, issuer has no role. It is traded between investors only. Only investor, one investor and other investor through this platform. So now the exchange platform is the way by which they can buy and sell share. There is no role of issuer, right? So primary, new issue market, secondary, which is done through exchange once the shares are issued. This is traded between one investor to another investor. Number of shares issued, number of shares floated in the market via primary market will remain same. It will keep on changing between one investor to another. Beneficiary will keep on changing. If I have received, let's say, certain share through allotment, and you want to buy, you didn't apply for, or you wanted to buy more, you can buy through exchange platform, and it will be traded among existing investors. Yes, Anshuman, you raised hand. Okay, you have written the answers. Primary market IPO, first time issuance of security. Yes, that's what I have explained. Anybody else, any doubt related to this part? Yes, I received your answer. Anybody would like to add any point or any doubt? No. Clear? Okay, now one question. Let's say a company, a corporate wants to issue bond, corporate wants to raise money via issuance of the bond. So will it come in primary market or secondary market? Will it be part of IPO or not? Is it an IPO if corporate wants to raise money via bond, not via equity, via bond? Is it IPO? Okay, I'm just reading answers. Yes and no, mixed answer. Some primary, some secondary. See, it's not secondary market. First I'll explain. I'll take one point where the confusion is. I can easily check. So whosoever is saying secondary market, it's not secondary market because yet not listed. They wants to raise money. So it is primary market. Is it IPO? Yes, initial public offer only through via bond. That is also seen. IPO is there in bond also. Bond are also issued first time. Okay, there is a huge market of bonds also. But for the retail investors, some of them might are not aware, but bond market size is also very sizable. Huge amount of money is invested into the market in short-term securities, long-term government securities, treasury bills. Now, investors' participation means retail investor participation has also been increased. You can see the bond market size. Once we discuss fixed income security, we'll come to know it is also very huge size. Yes, money market is also part of debt market only, Harsh. This is the only basic difference is less than 1 year. Less than 1 year, we consider money market. More than 1 year, the bond market where the bonds are issued for 3 year, 5 years, long term. Yes, it is bigger, Gaurav, right? Because the huge amount is invested and that is also like banks, interbank lending and all. What is these all? This is ultra short term requirement of the fund which is covered in money market. So amount is very high. In equities, if you talk about, it could be a little less also sometime. Okay, let's come back to next point. Okay, few of you are asking about few links and all. I can share my links, few of my links which are available. Give me a minute. Give me a minute to share that. Oh, give me a minute. This is about IPO, and I'm just searching one more, which is for basics of demat and trading account. Clearing and settlement also. One second. See from here, the Excel cannot be shared from here. That will be uploaded in the LMS section. So you can check from there. Okay. 1 second, let me go back to PPT part where we were discussing. Okay, I hope this is visible to everyone. Now you all can see the PPT. Just raise the virtual hand. You all get the access to that link. You all received the link in the chat box. Okay, fine. So basic details are covered, like about the primary market, about the IPO. You can get further details also, and few sites and links are also mentioned once I was explaining. So you can go through those sites and links as well. Like mostly I prefer the SEBI website for reading any circulars, and then RBI website for the bond market information, recent data related to that. So RBI website is authentic for that. SBI, NSE, BSE data also you can check. So these are preferred site related to these aspects about the capital market and all. Okay. Now coming to next, yes, Ravi, you raised hand. Just let me know. Whoever has raised the virtual hand, just write the question in the chat box. Fine, no query. Okay, so let's move ahead. We will discuss about merger and acquisition. What other here, it is not discussed in detail. These all will be covered in certain modules like capital market. Once we discuss about the cash equity part, the capital market in detail will be discussed, where we'll discuss about the initial public offer process, the steps involved. We can take a small case study related to any of the previous IPO. Right. So these all things will be covered over here. That is why I have not gone into very detail. Merger and acquisition, that has the complete module where M&A modeling will also be discussed. But here a very brief idea about business line of investment banking. Merger and acquisition is one of them. You all know the basics of merger and acquisition. What is merger and acquisition? Let's say one company, Vodafone Idea, that is the example of merger. Acquisition, one company acquires another, and the entity of the second entity which is being acquired is finished. For example, LIC and IDBI. LIC has acquired IDBI. In merger case, it is a most kind of synergy, like 1 + 1 is greater than 2. So merger happens, the basic cause is synergy. Okay. And in case of acquisition, they acquire another company. One more example in case of acquisition could be leverage buyout, where the company acquires another company via issuance of the debt. Like major portion is via debt. LBO. Example is Patanjali Ruchi Soya. Okay. Trading and brokerage. It is one of the most important business line of investment banking, where they are involved in market making activities. What they earn brokerage. They earn the difference between bid and ask, that is a spread, that earning of the investment banker, whereas they are also doing the proprietary trading. Research is about the equity research. Equity research recommendation here, mostly it is about different sectors. They are involved in research based on different industries and segment. For example, for FMCG, the research wing will be different, and for banking sector, it's not like one research entity or the advisor research analyst will be involved in all the sector. There are different research associate which are appointed for particular segment. They involved in banking sector, so they'll keep on doing the reports related to banking sector, thereby FMCG and all. In research, there are two basic divisions of research. One is the fundamental and one is technical. So here mostly we will talk about the fundamental research. Technical is based on the chart and analysis. You might be aware about the technical research, the software, candlestick charts, and different swing pattern and other things. That is part of his technical research, which believes the concept of history repeats itself, like the trends and patterns which are based on the volume, prices, that will repeat itself. So technical believes that history repeats itself. It is totally based on the movements, demand and supply movement, previous record, previous patterns. But fundamental is different from that. That both are having a different approaches or different thought line of thoughts are completely different. Fundamentals believes in the numbers, they are quantity, they are talking about the qualitative as well as quantitative figures. So that quantitative figures can be brought out from the financial statements. The financial statements are analyzed, thereby they check whether the company will do well or not based on the valuation metrics. They judge the company and they provide the research recommendation. Research recommendations are nothing. It could be in the form of buy, hold, sell. These are based on the analysis. Fundamental research is being done. Talking about the custodian services. So what are the custodian services? The basic meaning of custodian services is someone who is responsible for safe custody of security. As an investment bank, they are responsible for keeping the securities which are issued. So these securities are in the demat account. These are in electronic form. So don't get confused with NSDL and CDSL. NSDL and CDSL are depositories. Most of you will be aware about. These are two depository services which are National Security Depository Limited and Central Depository Services Limited. So these are the depositories, and custodian are the custodian banks. Custodian banks are not termed as depository. They also are responsible for safekeeping of securities, but the ultimate, these are the depository who hold the custody of the security. Legally, NSDL and CDSL are legal owner of the securities which are kept into that. Custodians are also providing different services. For example, ADR, GDR, cross-border securities, American depository receipts, global depository receipts. Custodian banks are also responsible for keeping providing the locker services, which is not part of NSDL and CDSL, right? Okay. Abhijit, CDSL is a depository, one of the depository. You can go to this website, www.cdslindia.com, where you will find so many services. NSDL was launched earlier. It was the first depository in India. CDSL came late. So only two depositories are existing. This is in terms of number of account. If you talk, the CDSL has more number of demat account as compared to NSDL. But NSDL was launched. This is in collaboration with NSC. This is with BSC. There is no difference. CDSL, you will see that 16 digits account numbers are there. For differentiation, you can see that will be first 8 digit will be the BOID, like beneficiary owner ID or the company's ID, and the last 8 digits will be client ID. DP ID and client ID. The 16 digits are demarcated in these two. For NSDL, like same, but NSDL will have alphanumeric, CDSL will have all numeric. Any other company can become in market other than these two. See, these services, right now there is no such other depositories which is a private company. Only these are existing. Okay, with the regulatory control as well. In India, we have only two. No private company has entered into this depository services yet, because they are the core. And yes, if we talk about the private company, taking your question further, so private company means these broking companies, these broking firms. What they do, they are just like an agent to these depository. They have taken the CDSL DP and this. These will be called as depository participant DP. For example, like Motilal Oswal Securities, Kotak Securities, they are also providing depository services, but they are depository participants, and these are depositories. So as a depository participants, they take either CDSL or NSDL, and then they are asking their account to open the demat and trading account in this DP. So they are depository participant. These are depositories, and we as a client are beneficiary owner, BO, and we have BOID. Okay, I hope you have understood now. So custodian services, ADR and GDR. I'll just give a brief about that, although this is included in one of my lectures in detail once we discuss about the cash equity part. This is nothing else, depository receipts. For example, IPO we talked about, any of the company wants to go public, means an Indian company wants to raise funds from Indian investors. That is IPO. Here also ADR and GDR are initial public offer only, but what they do, any of the Indian company wants to raise money, but it doesn't want to raise money from Indian investor. It wants to raise money from foreign investor, American investor, that will be ADR. Global in other than America, other countries like European countries, they will go for GDR. How it is issued? Depository custodian bank is involved into that. Depository is involved into that. Then registrar and transfer agent. So once they issue it, overseas custodian is the overseas depository, domestic custodian. These all parties are involved to facilitate American depository and global depository receipts, right? Okay, so restructuring is simply the structure of a company is being changed. It could be financial restructuring, it could be organizational restructuring. Organizational restructuring in the form of line hierarchy, this will be coming under organizational. And the financial is in term, once we are talking about any restructuring which is via, which is involving the financial needs. For I'll quote one example, like Reliance Industry. You might have seen several changes made in Reliance Industries. It has different subsidiary units. Reliance Power Limited, Reliance Capital Venture Limited, RNRL, Reliance Natural Resources Limited. This is what I recollect. So I'm writing the name of some companies which were associated with Reliance only, which is under the umbrella of Reliance. So this was Reliance Power Limited, Reliance Capital, RCVL, RNRL, Reliance Natural Resources Limited. So what they have done, they have merged these all together, means diluted, liquidated these companies. And since these were traded in the stock market, so at that point of time, any investor who were holding RPL, RCVL, RNRL, they had been given shares of Reliance Industries Limited as, and these shares were vanished from the DP. So against, there were a calculation because the price of Reliance Industries Limited was higher and these shares were certain penny stocks, like below 100 rupees. Some was trading nearly 33, 34, like this, below 50 or below 100. So based on the valuation, if they have, let's say 100 shares to one Reliance Industries Limited, you are getting my point, how, what exactly I want to say. Based on the calculation and the pricing, the shares has been given to the investors. If they have 100, so that much number of Reliance Industries. So taking these all and then providing the Reliance Industries. This is part of restructuring only. Or you can take the example of certain merger and demerger also. RT Industries is split into multiple businesses. Yes, Rahul. So that is merger and demerger. There are several examples. And I think in the previous session, we had discussed about different companies about these perspective, right? So here restructuring could be in different ways, means one company is having different units. One of the unit is not performing well. It is not at all performing. So liquidating that and utilizing that amount for the development of the unit which is performing. So that could be a restructuring. Okay. Next is asset management. So managing the asset of the company, and broadly, once we take the session, we will discuss about the entire business line. We will discuss mutual fund separately. Okay, for the sake of discussion of knowledge or discussion of this domain as well. Okay, let me check. Okay, rest of the point we'll discuss in our next session. And as I talk about the ADR and GDR, I'll take that into next session as well about the American Depository Receipt, Global Depository Receipt. Fine, everyone. So that is for today. All of you are there? Any question? Any doubt? Fine. Rajwal, I have already shared the PDF with the team. They will share it with all of you through LMS only, right? Okay, everyone. Thank you. Thank you. Yes, Aryan, that will be in the second stage. We'll cover. Thank you. I'm ending the session.